Okay, dear students, this is Mustafa Mirchawala from Mirchawala's Hub of Accountancy, and today we are going to discuss March-June 25 latest past paper, section C, question number 2, that is about individuals. Okay, so on your screen, just for your motivation, you can see our latest results. See this. We have marks in 90. See this, these students scored position. This 97 guy, he scored, there were two guys. It is written here one, but there were two. So two Pakistani top, one from Islamabad and one from Karachi. uh, these two students scored Pakistan top. Okay, and other positions are as well as there. So you can see that the students scored in 90s, 80s, 70s, 60s. So this is a big list. So if you want to be part of this list, then please don't waste your time. These students also followed the same lectures. They also did the practice, they did the mock, they followed the right strategies, and today they are in this list. Okay, so without wasting a single minute, let's move on to our question and let's start. Okay, so the name of the question is Chika. Chika commence self-employment. Commence self-employment. That means business. Okay, self-employment, you can call it business. Now, so this is the question of trading income. This is the question of business income. Okay, on 1st September 2024, preparing her first set of accounts for the 8 months to 30th April 2025. Now, slow. You guys have done a topic. There is a new topic, basis period calculation, because you know individual pays tax. See, Chika is an individual. An individual pays tax for fiscal year. Individual pays tax for fiscal year. Individual pays tax for fiscal year. So, but right now the accounting period is September, October, November, December, Jan, Feb, March, and April. See, this is their accounting period, 8 months accounting period. So, can anybody of you guess how many months lies in 24-25 fiscal year? This is September 24. Okay, so how many months lies in September 25 fiscal year? C. Your fiscal year will effectively end on 31st March, although it is end on 6th April, right? But if I round off the months, if I round off the month, it will be 31st March. So you can see September, October, November, December, Jan, Feb, and March. 7 months. 7 months lies in 24-25. This is 24-25 fiscal year. So in the end, well, when I'll be calculating tax adjusted trading profit, when I will be calculating tax adjusted trading profit for 8 months, then I will apportion like this: 7 upon 8, 7 upon 8, that out of 8 months, 7 months lies in this fiscal year. Okay, so 7 months profits will go here, and 1 month profit of this accounting period will go in the next fiscal year. Okay, so this thing I'll be doing, and yes, we have done this thing in class as well. So Shika has elected to use the accrual basis for her self employment income. Okay, so they are using accrual basis. Now Chika's statement of profit and loss for the 8 months. Now this is now all the adjustment. Listen very carefully. All the adjustment of allowed, not allowed, even the capital allowances, allowed, not allowed, add back, everything, including capital allowances, we do it for accounting period. Everything we do for accounting period. But once we calculate tax adjusted trading profit, then we apportion, then we align our profit to fiscal year. Okay, let me say this in Urdu. हम पूरा काम अकाउंटिंग प्रॉफिट से टैक्स एडजस्टेड ट्रेडिंग प्रॉफिट तक का सफर अकाउंटिंग पीरियड के लिए करते हैं और एंड में उसको फिस्कल ईयर के साथ अलाइन कर देते हैं. ओके, नाउ द फर्स्ट थिंग, Chika's statement of profit and loss for the 8 months. This part is very tasty, very easy, one of the favorite part of students. Okay, in scoring area, Chika's statement of profit and loss for the 8 months period to 30th April 2025 is, so this is your net profit. You will start from net profit and then you will adjust. So first thing, can anybody guess which one expense is strictly not allowed? This is not allowed. Depreciation is strictly not allowed. You'll add back. You can just within seconds. This is allowed, no adjustment. This is allowed, no adjustment. For allowable expenses, no adjustment. Okay. Now the next last thing is left is car. Car is left now. Chika's car expenses during the 8 months period to 30th April 2025 for insurance, fuel, and total 2600. Yes, 2600 is written. She drove a total of 7500 miles scoring area, of which 1500 were for private journeys. Now, you know, owners, Chika is the owner. Chika is the owner. So owners private expenses not allowed. Owners private expenses not allowed. Okay, so how you gonna calculate the private use? See, 2600 is the expense, multiply by your total miles are 7500 miles, and what are the private miles? 1500. So this is going to be the private element. This is going to be the private element. And yes, just use your common sense. Just use your brain, your common sense. That whenever examiner has allowed complete expense, whenever examiner has already allowed, accountant has already allowed complete expense, but there is some portion of private use in that, then you just add back. Then you just add back the private part, the private portion part. Okay, so yes, now this private portion part will be added back. So right now we identified two adjustments. This complete depreciation not allowed, this complete depreciation not allowed, and from this 2600 we'll multiply 2600 into 15 upon 7500, and this private portion is not allowed. Now during June 2024, now use your brain. During June 2024, first thing, Chika incurred advertising expenditure to promote her new business. Now wait. The business started in September 24. The business started on 1st September 24, but this advertising expenditure has incurred in June 2024. So this advertisement expense incurred before the start of the business. Before the start of the business, 2 or 3 months before the start of the business. So yes, they are also allowed, and they are allowed with the name of pre-trading expenditure. They are allowed with the name of, hope you remember trading income chapter, they are allowed with the name of pre-trading expenditure. Okay, so normally what are pre-trading expenditure? They are incurred before the start of the business, but for the start of the business, for the sake of the business. Okay, so they will be allowed as if they are incurred on the first day, as if they are incurred on the first day of the business. Okay, so yes, in normal circumstances advertising expenditure is allowed. So in case of pre-trading expenditure, it is also allowed, and it is allowed in such a way that as if it is incurred on the first day of accounting period. Okay, so it is allowed, but they are saying, see this expenditure, see, has not been deducted in the calculation. So accountant has not already deducted, but the tax department is saying okay, it is allowed, so we'll deduct. Now we will subtract this 1180. We'll subtract this 1180. Hope you remember my classes. I have explained these adjustments in the class, that if a certain expenditure is allowed but accountant has not yet been deducted, or accountant has not done anything, then we'll subtract it because it is allowed. So we'll subtract this 1180. So three adjustments we have done. Now, Chika purchased the following vehicles on 1st September 2024. Don't forget the accounting period is 8 months. Don't forget, whenever you start, these are famous mistake. These are famous check and balances. Whenever you start capital allowance topic, always open your eyes and see the accounting period length. So the accounting period length is 8 months. Accounting period length is 8 months. Okay. So now for the 12 months AIA is 1 million. So can you calculate for 8 months? 8 months it will be 66667 something. So still it's a big amount. AIA still it's a big amount. Now see the dodge. Very good dodge. They have bought a delivery van. Now this CO2 is irrelevant. For delivery van, this CO2 is irrelevant. And yes, delivery van is not a car. I know for cars AIA is not allowed. For cars AIA is not allowed, but for delivery van it is allowed. It is allowed, and yes, they are making you fool by giving CO2 emission rate. For delivery van, CO2 emission rate is irrelevant. Okay, so this delivery van will be easily cancelled in front of AIA. So for this 13,900 you will get complete. You will get complete. You will get complete AIA allowance. Okay, so this 13,900 will go straight away in the allowance column. This 13,900 will go straight away in the allowance column. Okay, now my dear student, the next thing is car. Car is, yes, for car CO2 is very important, 44 grams. So that means between 1 to 50, 1 to 50, between 1 to 50. So it's a main pool car and it will attract 18% WDA. This car will attract 18% WDA. But the good news is, listen, that the car C note 2. So it is used by Chika, and see this, it's a privately used car. See, it's a privately used car. It's a privately used car. So now whenever, if it is a car privately used asset by owner, if it is a privately used asset by owner, then you depool it. Then you mandatory, it's an obligatory thing to depool it. So you will separately write it, and first you will calculate normal capital allowance, and then in the end you will multiply it by business percentage. Then in the end you will be multiplying it with business percentage, and then finally you will take in the allowance column. I know you have done this topic, privately used asset. So let me calculate this. This is 11,500 into, tell me the CO2, check the CO2 emission rate, 44 grams. And you know there is no AIA on cars. So for with 44 grams, the WDA rate is 18%. And yes, the accounting period is only 8 months. So 8 upon 12. And finally, you will multiply it by business use percentage, business percentage. Okay. See, this is the normal. This is your normal. This is your normal capital allowance, okay, for this car. But in the end you will multiply with business use. Now what are the business use? 7,500 are the total miles and 1,500 is the private. So 6,000 miles are business miles. 6,000 miles are business miles. So it will be multiplied by 6,000 divided by 7,500. See, this is the business use percentage. This is the business use percentage. And if you want to, if you know good maths, then you can also calculate the percentage as well. 6,000 divided by 7,500 multiplied by 100 will give you 80%. So my dear student, 80% is the private use. 80% is the private use. 80% is the private use. Okay, so this capital allowance, this and this, these two are the capital allowance. And yes, capital allowances are always deducted from accounting profit to tax adjusted trading profit calculation. We'll deduct it. Okay, now very good news. Chika's forecast tax adjusted trading profit for the year end, next 12 months, see, this is for the year ended 30th April 20 is 84,000. Why they are giving you? Because they might be asking you 25-26 fiscal year assessable profit. Okay, they might be asking you 25-26 fiscal year assessable profit. Okay, so you need to do some apportionment as well. So you need to do some apportionment as well. Yes, what was the previous accounting period? The previous accounting period was ending at 30th April 2025. See with open eyes, 30th April 2025. And they have given you one more accounting period, that is 30th April 2026. So now this is the, now apply breaks. This is the first part. This is the first part, which is trading income. Which is trading income in this question? Which is trading income in this question? See the requirement, a good requirement. Calculate Chika's tax adjusted trading profit for self-employment business for the 8 months period to 30th April 2025. Your computation, please be confident. Your computation should commence with the net profit figure of 51260, indicating by the use of zero any, write this. Okay, so it's 5 marks, cash 5 marks. Don't worry, I'll solve it on Excel. I'll be solving it on the software, so don't worry about it. I was just explaining you right now. Now the next thing is calculate the amount of trading profits for self-employment that will be assessable profit on Chicas for tax year 24-25 and 25-26. Listen, easy requirement, easy, relax. First of all, this is your 8 months accounting period, 8 months, and these 8 months are ending on 30th April 2025. Okay, so starting on September, ending on April. So September, October, November, December, Jan, Feb and March, only 7 months. Only these 7 months lies in your 24-25 fiscal year. So when you are calculating assessable profit for 24-25 fiscal year, only these 7 months out of 8 months, only 7 months profit will be taxed. Okay, so that's why we'll apply 7 upon, in the end, on the final answer we'll apply 7 upon 8. Okay, so this is for 24-25, this is for 24-25. Now listen, for what we'll do for 25-26, let me make a little bit bigger sketch. See here, September, October, November, December, Jan, Feb, March and April. See, this is the end of first accounting period. Then see, May, June, July, I'm changing the color, August, September, October, November, December, Jan, Feb, March and April. Next 12 months of the accounting period. Now let me make the walls. See, first of all, this is your, this area is 24-25 fiscal year. So first see the red marker. In the red marker, 8 months accounting period, 8 months accounting period, 7 months accounting period falls here. 7 months accounting period falls here. Can you see? So 7 upon 8 here. Now this is your new fiscal year. See, from this 1st April, effectively I'm rounding it off. So this is going to be your new fiscal year from 1st April to 31st March. Now can you apply your brain? In this new fiscal year of 25-26, in this new fiscal year of 25-26, this first month belongs to previous accounting period. So what we'll do, the previous accounting period is 8 months, the red marker is 8 months, so we'll take 1 upon 8 from that accounting period. Out of those 8 months, we'll take 1 upon 8, only 1 month. Okay, and then we have a blue marker, see, light blue marker. So the next, see this, these next 11 months out of the 12 months accounting period ending 30th April 26. So we'll apply 11 upon 12 on this accounting period. So when you add this and this, these two, you will get 25-26 fiscal year assessable profit. You will get 25-26 fiscal year assessable profit. Let me say this in Urdu language. There are some Urdu students as well. Listen, देखें, फिजिकल ईयर हमारा जो नया शुरू हो रहा है ना 25-26 का, वो 1 अप्रैल से शुरू हो रहा है. तो ये अप्रैल वाला महीना पिछले अकाउंटिंग पीरियड का है, तो ये 1/8 करके यहाँ ऐड होगा क्योंकि 8 महीने का अकाउंटिंग पीरियड था. और उसके बाद ब्लू मार्कर वाले 12 महीने नजर आ रहे हैं, जिसमें से इस फिजिकल ईयर के अंदर 25-26 फिजिकल ईयर के अंदर ब्लू मार्कर वाले 11 महीने हैं. तो 11/12 का फ्रैक्शन बनेगा और फिर इसको और इसको ऐड करेंगे तो 25-26 फिजिकल ईयर का आपके पास आंसर आ जाएगा. Okay, so this is the 3 mark more. This is one more 3 marks, one more 3 marks. Next, now they are asking calculate Chika's 7 marks. Chika's taxable income, only taxable income. They are not asking income tax liability. They are not asking you income tax liability. No need to calculate, just taxable income. Taxable income means 3 columns: non-saving, interest and dividend. Just first calculate total income, then less qualifying interest paid, you will get net income, and from net income you will deduct personal allowance, so you will get taxable income. Only taxable income you need to calculate. So whenever somebody asks you to calculate taxable income, then it means you need to calculate all incomes in this question. You need to calculate interest income, dividend income, property income, whatever income is given in the question, you need to calculate. You need to work on it. You need to work on it. Okay, so one major part in this question is property income, which is easy, honestly very easy. Honestly, we have covered this in class. If you have taken the class, you have seen it. See, this is property income. And you know, for property income, don't forget cash basis. Everything on cash basis, pure cash inflows and outflows, inflows and outflows. Chika's let out residential property which he has owned for a number of years. Okay, during the tax year 24-25, the rent due means the actual rent, the actual rent for that fiscal year. The actual rent for this fiscal year should have been 8640. So that means your tenant should have paid this amount, but what tenant did? The tenant did not pay the March 25 rent of 720 until May 25. That means out of this 8640, out of this 8640, 720 is unpaid. So how much is paid? How much is paid in this fiscal year? 8640 minus 720. Wait. Okay. 7920 is paid and 720 is unpaid. Now use your brain. This amount is paid, this is paid by tenant, that means received by us. So you tell me, we are working on cash basis, pure inflows and outflows, so we'll only include this amount. 7920 is your rent, actual rent received in our fiscal year, is your actual rent received in our fiscal year. Okay, so we'll only take 7920, or you can say 8640 minus 720. 8640 less 720, because it has not yet been received. So now the remaining part is very easy, very easy, all easy easy. The expenditure on the property for the tax year 24-25, agent fees and insurance, yes, it's a revenue expenditure allowed. Replacement washing machine, wait, it's the word is replacement, that means it's not a first time buying, it's not a first, it's replacement. Yes, I have taught you this, replacement is allowed if there is no improvement. Now see, the new machine is the same model means same quality, same model same quality, that means no improvement. No improvement, full allowed, full allowed. When no improvement, it is full allowed. Okay, so this 500 will be full allowed. Replacement allowed if no improvement. Okay, remember my dialogue. Now replacement of dishwasher 490. The dishwasher was an upgraded version of one it is replaced. Had the replacement been of the same model as the old dishwasher, it would have cost 390. Only this is allowed. Only same, hope you remember, only same quality is allowed, the improvement element is not allowed. So my dear student, the difference between 490 and 390, 100 is the improvement, only 390 is allowed, only 390 is allowed, only 390 is allowed. Okay, so property income we'll do on Excel thing. Now, UK government securities gilts, very interesting, a short 30-40 minutes topic you have covered in your studies. Gilts, so for capital CGT purposes, gilt is exempt. Gilt is exempt. You buy these type of government securities and sell it, no capital gain tax. Okay, but my dear student, interest income is full-time taxable. Interest income is full-time taxable. Okay, so what happens, you sometime buy a gilt government security, and when you sell it, there is some accrued interest inside that loan note, accrued interest inside that security. So the seller is responsible to pay in tax on that interest income for the duration he owned it, for the duration he or she owned it. Okay, why? Because normally seller takes the interest income in the form of the selling price, in the form of the selling price of that security. I gave a very detailed lecture in my class for this. Okay, right now it's revision days. So if I summarize it, listen, if I give a summary, listen, you bought on 1st December, keep this date in your mind. On 1st December 24, Chika purchased 12,000 nominal value of gilts, paying interest at the rate of, yes, 2% per annum. Nominal rate is important. Interest is paid half yearly on 31st October and 30th April. Chika sold the gilts on 31st March 2025 for, this is irrelevant. This is irrelevant. Okay, the selling price is irrelevant. Now wait, if you remember my lecture, or let me give you a very easy summary. If you buy gilts in the same fiscal year and sell in the same fiscal year, buy in the same fiscal year, sell in the same fiscal year, simply count your period of ownership. That's it, and calculate interest income for that. Simply count your period of ownership. So you bought it in December, then January, Feb, and you sold it on 31st March. You sold it on 31st March, that means 4 months. You own this gilt only for 4 months. So for these 4 months you are responsible to pay tax on the interest income, right? So accrued interest income inside this. Why? Because the pay receipt date for interest income is 30th April. Receipt date for interest income is 30th April. So that means 4 months accrued interest is inside the stomach of this loan note. 4-month accrued interest inside the stomach of this loan note. So seller is responsible to pay tax for these 4 months. Okay, I repeat last time, whenever, simple summary, there are other cases as well, but right now easy cases here. Whenever you buy a loan note or this gilt in the same fiscal year and sell in the same fiscal year, same. So now just simply count your months, simply count your months of ownership. Okay, so it's going to be, wait, how to calculate 4 months interest income? Nominal value, which is 12,000, multiply by coupon rate 2%, it's per annum, into 4 upon 12. See, this is your interest income. Simple. This is your interest income of Chika, for which Chika is responsible. And yes, interest income go in the interest income column. Now jointly held income. Yes, excellent topic. Husband wife. So if you remember my lectures, whenever there is a jointly held account or jointly held property, and if examiner is silent, then always it will be distributed 50-50, 50-50, 50-50, 50-50. Remember, for tax purpose. Now come here. During the tax year 24-25, Chika and her husband received the total saving income of 460. Again, this is saving income like interest income from a deposit account which is in their joint name. So 460, half, 230 husband, 230 wife. Simple. 230 will go in the husband account, 230 in the wife account. And yes, we in this question we are just calculating for the wife account, so 230 only. For the wife Chika, only 230. Just enjoy. One more thing, last thing. Chika and her husband also jointly rent out one furnished room. Hope you remember this relief. Furnished room relief, rent a room relief, rent a room relief of their main residence. Yes, they are living in the residence and they are giving one room or few rooms, one room or few rooms. During the tax year 24-25, the couple receive rent of 8600 without incurring any allowable expenditure. That means zero, actual expenses are zero. Chika and her husband always use the most favorable basis as regards the tax treatment. Okay, let me explain you. The first one is actual treatment. Actual treatment is, listen, their rental income is 8600 and their actual expenses are zero. Actual expenses are zero. So if they choose for actual one, actual expenses, then they have to pay tax on 8600 profit. Now, what is the relief working? Remember this relief working. Now you will write rental income, which is actual 8600, and then you will forget the actual expenses and you will less the relief. You will deduct the relief of 7500. So only you have to pay tax on 1100. Only you need to pay tax on 1100. Only you need to pay tax on 1100. Now you tell me which one is the favorable basis. Definitely 1100 is good. Paying tax on 1100 profit is good. Okay, but again, Chika and her husband jointly. So this 1100 is between husband and wife. This 1100 is between husband and wife, and the examiner is silent, so always 50-50. Always 50-50. And we are only calculating income for wife. So 11, half of 1100 is 550 will go in the wife account. That's it. Enjoy. Enjoy. Okay. So finally we are calculating taxable income, no issue. All three requirement I can teach easily, but one thing, please take the pictures. First take the pictures of question. Let me move the picture because now I'm going to shift the screen. This is the starting first slide. Please take the picture because I'm going to move the screen. This is the second area. Then this is the third area. Take the picture, please. Then we have requirements, three requirements. Okay. So finally I'm moving to the Excel area. Okay, so this is the first requirement. This is the first requirement. Now just to save our precious time, I've already written the headings, already typed few things just to make your class effective, and less time in less time we'll complete it. So the first requirement is you need to start the journey from accounting profit and it will end on tax adjusted trading profit. So first of all, from net profit, depreciation not allowed. Accounting depreciation not allowed. Accounting depreciation not allowed. So it will be 1700. 1700 we'll add back. Then Then motor expenses. I told you only the private portion. 2600. See the screen. 2600 into 1500 private miles divided by 7500. So this will be equal 2500 times 1500 divided by 7500. Wait, sorry, it's 2600. Sorry. Okay, see again, please check, it's 2600. Now advertising is full time allowed pre-trading expenditure, remember. And advertising is allowed and they have not already deducted, so we'll deduct. It's going to be 1180. You have the question, you can see. Now capital allowances, I have already explained you. Delivery van, complete 100%, complete 100% AIA, it will qualify for complete 100% AIA. And but the privately used car, see the screen, 11500 into 18%, because the CO2 is emission rate is between 1 to 50, and then 8 upon 12 is the accounting period, and then private use adjustment. So we'll multiply it by business use, it will be 1104. See, so now finally your tax adjusted trading profit will be this amount. This is for 12 months. This is for 12 months. So sorry, 8 months. This is for 8 months. Let me tell you the months. Be active now. September, October, November, December, Jan, Feb, March and April. 8 months. September to April, 8 months. Tax adjusted trading profit. Tax adjusted trading profit. Now out of these 8 months, listen, next requirement, I'm going to shift on the next requirement. Out of these 8 months, September to April, only 7 months falls in 24-25 fiscal year. See, 7 months falls in 24-25 fiscal year. So see this, so we'll take 7 upon 8, this 37296 into 7 upon 8 into 7 upon 8. Wait, this will be equal 37296 into 7 divided by 8. 32634. 32634 is taxable, is assessable in 24-25 fiscal year. Now my respected student, use your brain. What about, they have also in the requirement, they have also asked the forecast for 25-26. In 25-26, 1 month we'll take from this. See, 1 month we'll take from this 37296, 1 upon 8. So this will be this into 1 divided by 8, 4662. And then from the remaining 12 months, the blue marker, remember the blue marker, we'll take 11 months. We'll take 11 months. I have already explained you. We will take 11 months. I have already explained you this. You just think about it. So equal 84,000 times 11 divided by 12. Okay. So what about these two? Let's add these two. This is for 25-26 and this is for 24-25. This is the 3-mark requirement. This is the 3-mark requirement. This is the 3-mark requirement. Okay, now let's start. Now they are asking, see, I'm for 24 Chika's taxable income for 24-25 fiscal year 24. So the first thing is trading profit. Now don't pick trading profit from here. We'll only pick this one, the 24-25, the apportion one, 7 upon 8, this one. So we'll write here equal, and see, I have picked this 24-25. Okay, so 3 2, sorry, let me arrange the cell. Yes. Now for property income, I have written here working one. Now let's start the property income working. See, property income working. Can you see? So this will be how much rent receive. Rent receive is 8640. You can also write the net amount, but I'm let 8640. Then you remember some amount cash, some amount rental was not received. So we only do cash 720 minus 720c. So if you deduct 860, 8640 less 720, automatically the cash amount will come. The cash rental income will come. Now how many expenses was allowed? Agent fee and insurance is allowed, so it's going to be 1000. Yes, allowed expense. Then replacement washing machine full allowed because full time there was no improvement. There was no improvement. But in dishwasher only 390 was allowed. Only 390 was allowed. Only 390 was allowed. First, let's calculate this. 6030. Now, see this. Remember renter room relief 8600 minus 7500. We have to go for most favorable manner. So renter room relief working is better. 8600 minus 7500, and yes, divide by 2 because husband wife, and we are only calculating for wife. We are only calculating for wife, so it will be 550. Now calculate the total property income. Total property income is 6580. Total property income is 6580. Open your eyes and just relax and look at everything. You will understand. It's not difficult. Yes, you have done property income. So now this property income 65808, it will go here, equal okay. Now we have saving income. Saving income was for, there were two saving incomes. One is gilt, and yes, gilt is only for, see this, gilt is only for 4 months. So 12,000 was the nominal value. You know, you always calculate interest on gilts on nominal value into coupon rate. So 12,000 multiplied by 2% into 4 upon 12. 12,000 into 0.02 into 4 upon 12, 80. And then there was joint deposit account, so 460 divided by 2 is 230. We've already covered this, okay. So now calculate the total income. Wait, 39524. From this total income, there is no qualifying interest paid. There is no qualifying interest paid. So this is net income, and this is going to be your ANI, adjusted net income. And my dear student, whenever your ANI is less than 100,000, your personal allowance is 12570. 12570, very famous number, 12570. So finally we are very close to our destination. This is your taxable income. Here you go. This is your taxable income, the last 7 marks requirement. The last 7 marks requirement. So nothing is difficult. Nothing is difficult. Very ordinary question. If you guys have done the exam kit, Kaplan exam kit and study hub, both are very important. Kaplan exam kit and study hub, both are very, very important. Please practice. In F6 tax paper, practice makes you learn things, because this paper is about learning, recalling small things. So practice is the key. Practice is the key. It's like maths, accounting, taxation. These papers requires practice. Okay, so this is the working for property income. You can see. Let me show you other parts as well. This is the requirement number C. This is requirement number B, which is the basis of assessment area. We have done this in class as well. The time apportionment things, yes, we have done in the class as well. And this is the very ordinary trading income part, and your famous part, accounting net profit to tax adjusted trading profit. Accounting net profit to tax adjusted trading profit. Okay, so that's it for today's class. Thank you students, and take care. If you like this class, share it with your friends and also comment on my YouTube. Thank you.